You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome back to the Deep Dive. So, today is Wednesday, October 22nd, 2025. We've just been through a really dense briefing, haven't we? Covering, well, everything from FX right through to these remote geopolitical flashpoints.
Yeah, it's quite the landscape.
It really is. Oh. And this isn't just noise. It feels like a snapshot of global strategy really shifting gears.
That's absolutely right. And our goal here for you listening is to kind of cut through all that information, pull out the key signals, the context you need, especially where, market volatility and geopolitics are really smashing into each other right now.
Right.
And the backdrop is, well, two big things. Pretty high volatility in commodities and this intense wave of tariff news that's literally changing trade routes as we speak.
Okay. Yeah, we're seeing sterling move. Gold is doing its usual dramatic thing. But I agree, the massive story has to be this proposed U.S. tariff hike on China. I mean, it's so big it forces a total rethink of supply chains.
And yet at the same time.
Right. And at the same time, this potential major de-escalation happening elsewhere. Okay, let's try and unpack this. Maybe start with the currencies.
Sounds good. So the currency markets this morning, they're showing these classic signs of policy gaps widening out a bit. Sterling, the pound, is definitely softer.
Yeah, I saw that.
And that's really a direct response to the UK inflation print for September. It came in cooler than expected, which just immediately got the market thinking, okay, Bank of England rate cut by year end is looking more likely.
And the politics seem to be lining up with that too, right? We saw Chancellor Reeve's budget aiming for cost of living relief, cracking down on some tax partnerships.
Exactly.
The market reads that as, okay, fiscal policy fits with easier monetary policy from the Beijing, like you said.
Right.
But hang on, if a rate cut seems so likely and inflation's cooled, shouldn't sterling be even weaker? Or is something propping it up?
That's a really sharp question. I think what's probably providing a bit of a floor is, well, the dollar is pretty flat overall right now. And the euro is also stuck in a really narrow range. You've got Eurozone policymakers pushing for lighter regulations to boost growth, which kind of hints at their own economic worries.
Right, so it's not just the UK.
Not entirely. And then look at the Swiss franc. We heard from SNB Vice Chair Schlegel basically flagging that inflation could tick up again and they're ready to act. So, yeah, the softness isn't unique. It's just that the UK policy signal is maybe the clearest one right now.
Got it. Okay, shifting over to Asia. That constant push-pull between wanting stability but facing trade friction. The PBOC, China's central bank, seems to be pushing back against yuan depreciation.
Yeah, definitely leaning against it. They set the fix stronger than the market expected at 7.0954.
Right. That feels like a very deliberate, we want stability message from Beijing, doesn't it? Especially with the U.S. trade stuff heating up.
It absolutely is. And they kind of need that signal when you look at dollar-yen. It's stuck just under 150.
It's still there. Wow.
Yep. Traders are basically juggling this huge policy gap, the BOJ versus the Fed, and now there's news about a potential new Japanese stimulus package, too.
Which just complicates things further, I guess. Stimulus could mean inflation pressure, even if the BOJ tries to keep monetary and fiscal separate.
Exactly. It adds another layer of uncertainty for traders to weigh up.
Okay, let's pivot. Speaking of risk and stability signals, let's look at commodities. Supply risk seems to be the big theme there.
Very much so. Crude oil, for instance, is firmer, and it looks like a combination of really three things pushing it up.
Okay.
First, you've got that immediate supply risk. Reports came in about Russian strikes hitting oil and gas infrastructure over in Ukraine, in the Poltava region.
Ah, right. That's tangible risk.
Definitely. Second, there was an unexpected draw in U.S. private crude stocks, about 3 million barrels.
Okay, so tighter near-term supply confirms demand is holding up.
Exactly. And the third factor is Washington stepping in with a kind of future demand anchor. They're planning to buy another 1 million barrels for the Strategic Petroleum Reserve, the SPR.
Okay, the SPR buy. I noticed the delivery is way out, late 2025, early 2026. Is the market really reacting to demand that far out? Or is it more symbolic?
It's largely symbolic, I'd say, but symbols count in the oil market, you know?
Sure.
It confirms the government's there as a buyer if prices fall too low, kind of a psychological floor. But the really interesting potential shift, the strategic one, might be buried in the details around India.
Ah, the U.S.-India trade deal.
Exactly. There are whispers that it might include things affecting how much Russian oil India takes.
Right.
And if India, a massive buyer, changes its purchasing patterns because of a geopolitical deal, well, that could have major knock-on effects for global crude flows and pricing. That's a big one to watch.
Yeah, the fundamental realignment potentially. Okay. Meanwhile, gold is still all over the place.
Yep, highly volatile. It tried to bounce back sharply, but that faded pretty fast. Prices are lower after Tuesday's big sell-off, but it's still hovering around that $4,000 an ounce mark. The volatility remains high.
And other metals, copper, things like that.
Base metals seem to have steadied a bit. They kind of retraced back into their old range after Tuesday's drop. The market's trying to find its feet, I think, digest all this trade news complexity.
Okay, speaking of complexity, we absolutely have to dive into the tariff tangle. This feels like the defining signal right now. President Trump reiterating U.S. tariffs on Chinese goods jumped to, what was it, roughly 155%?
155%, yes. Slated for November 1st.
Wow.
And that number, 155%, it's not just high. Well, it's basically prohibitive. It means stuff either stops moving or finds a completely different path.
And adding to the uncertainty, that planned meeting with President Xi might not even happen in the next couple of weeks.
Correct. That just throws more political fuel onto this trade fire.
So what's the play here? Because you've got this massive escalation, but happening right alongside a major de-escalation.
Right.
Washington and New Delhi reportedly getting close to slashing tariffs on Indian exports from like 50% down 16%. That's huge.
It's dramatic. It's not just a cut. It really signals a strategic reset in that bilateral trade relationship.
So how much of this is basically shut down the China route, open up the India route?
I think it's almost entirely about that kind of strategic split. The U.S. is actively, building an economic wall around China while strengthening ties with partners like India. And it's not just U.S.-China friction anymore.
No.
Look at Europe. The EU is gearing up for tougher talks with Beijing on export controls. Germany and France are pushing the rare earth restrictions issue right up to the leadership level this week. They want it sorted fast.
Because those are critical inputs for them.
Absolutely. Foundational for their industry, their tech. And you're seeing South Korea do something similar. Their trade minister raising concerns with China about shipbuilding, again, rare earths. It feels like a coordinated pushback. Beijing's not just sitting back, though. They seem to be working on financial defenses, exploring a three-way currency swap with Japan and South Korea.
That's right, which shores up regional financial safety nets, but also, subtly expands the use of the yuan in the region. It's clever.
And the friction keeps spreading. China's opened an anti-dumping probe into U.S.-made analog IC chips. That hits the tech supply chain directly.
And then there was that weird logistics thing, U.S. Customs seeing a huge wave of parcels. What was that about again?
Yeah. That's the end of the de minimis exemption. Used to be small packages, low value, came in basically duty-free, minimal checks.
Right. I'll remember.
Well, that's gone. Now all those small packages need checks, need tariffs paid. It's causing real headaches for logistics globally and changing how small items are traded.
Okay. Wow. Let's broaden out to the pure geopolitics. Still tense everywhere, it seems. Russia, Ukraine.
Yeah, the usual claims and counterclaims. Moscow says it has security guarantees for the Zaporizhia power plant restoration. Kyiv points to ongoing strikes inside Russia, in Bryansk.
Diplomatically, any movement.
The White House says a ceasefire path is still there, but that potential Trump-Putin meeting, still not locked in. Lots of prep work happening, apparently, but still uncertain.
And the Middle East. Secretary Rubio is heading to Israel.
Expected later this week, yes. And that's happening as Israeli media are reporting warnings from their own security people about the, let's say, the pace of implementing U.S. plans. It highlights a really sensitive, maybe closing policy window there.
Right. Tensions remain high. And Asia-Pacific, South China Sea.
Very sharp exchange there recently. Beijing protested Australian military flights near the Paracel Islands, and they used strong language, warning they'd resolutely block and drive away incursions.
That sounds like high risk for miscalculation.
Definitely. Aerial or maritime incidents are always a risk with that kind of activity and rhetoric.
And connecting this back, you mentioned earlier how these strategic debates are widening. It's not just the Indo-Pacific anymore.
Exactly. We're seeing reports, for example, of Washington pressing Argentina to limit Chinese influence on key projects there in the Americas. It just shows this competition over sourcing, over influence is global now. It's infrastructure, too, not just goods.
Okay, let's wrap up the strategic picture with one final policy point you flagged. Something about nuclear waste.
Yeah, this is quite interesting. The U.S. is moving forward with a plan to let energy companies access nuclear waste
Excess waste. For what?
as feedstock to make fuel for advanced reactors.
Wow, okay. Recycling nuclear waste. What's the big picture implication there, strategically?
It's pretty clear and quite significant. It's part of this long-term, multi-year effort to really diversify energy supply current away from Russia.
Ah, the Russian nuclear fuel connection.
Exactly, away from their fuel, their enrichment services. This is about tackling that energy dependence right at the source, trying to bring a critical part of that supply chain home, essentially.
Okay, so let's try and summarize the big takeaways then. What should folks really focus on from today?
Okay, well, I'd say sterling policy is looking distinctly dovish. Expect pressure there. Crude oil supply risk is very real, driven by actual events on the ground. And global trade is clearly splitting. You've got these massive, almost prohibitive tariffs aimed at China, right alongside major tariff relief and partnership building with countries like India. It's a bifurcation.
So, putting it all together, the volatility we're seeing, it's not just market jitters, is it? It feels much more fundamental. It's about actively reshaping supply chains, locking in new geopolitical alignments for the long haul.
I think that's exactly right. Every currency move, every trade negotiation, it reflects these bigger choices about who gets access, who faces barriers in the next decade.
Okay, so here's a final thought for everyone to chew on. We talked about that extreme 155% U.S. tariff on China, potentially kicking in November 1st. How fast do you think the strategic scramble accelerates in places like Latin America? Thinking about Argentina, Washington's concerns there, how quickly will companies be forced to find completely new, reliable sourcing routes well outside these traditional, now incredibly unstable partnerships?
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.